Good evening, everyone. Welcome to our tutorial on SSGPlus. My name is Ann Cunez, and I am here as your host this evening, and my main job is to monitor the questions that you submit during our webinar. I'm joined here by Susie Artsberger, the Director of Online Stock Tools, Information Technology, and Data at Better Investing. Susie will be guiding us through this tutorial, and I have to say that she is the best person for this job. She not only leads the team who is responsible for developing and constantly improving these tools, but she also uses them to manage her own stock investments. So without further ado, let's get started with SSGPlus and see what Susie has in store for us.
Well, thank you, Ann, and thanks everyone for coming out today and spending some of your valuable time with us. We thank you. We give a big thanks to our backroom staff as they do a great job of helping to answer some of the questions as we go through our webinar. Let's get started. This is our standard disclaimer that you may have seen before in other webinars. This webinar is for educational purposes only. We will be talking about a particular stock tonight as we learn SSGPlus. I do not own the stock that we will be looking at. Regardless, you need to do your own research. Don't go off and buy a stock on the basis of a product demonstration like this. You may also see me link off to other websites as part of our integrated research feature. I am using those websites to show you research links and to help complete our demo SSG, but the sites are not necessarily endorsed by Better Investing. Our session is being recorded for future use in case you have to leave the webinar early or want to review it again at a later date. The recording will be posted in our members-only video learning library on the website sometime on Thursday. In today's webinar, we will provide an overview of SSGPlus, including how to access it and use its basic features. However, this is not an in-depth discussion of our stock selection guide methodology. You will see the methodology in action as we move through an actual stock selection guide, but we won't spend much time explaining how we came up with our forecasts because the emphasis is on how to use the tool. Those judgments are an important part of the SSG, and we have lots of other resources available to you if you are wondering how to develop your own judgments. The last page of the handouts contains helpful resources to help you in that topic. Our guide in this webinar is what we call our Quick Start Guide. It is available as a handout, and the handout can be downloaded from the GoToWebinar control panel. When we post the webinar on Better Investing website, we'll also post these handouts. If you have any questions along the way, please feel free to submit them. We usually get to answer most of them during the webinar, but if by chance there's any left over, I will try and circle back and answer you by email after the webinar. Tonight we're going to be talking specifically about the SSGPlus tool, but it is actually part of a larger suite of tools, and we have tutorials for each of these. Core SSG is a very similar product, with the main difference being that the core leads you through the SSG step-by-step. It is best for people who are new to our stock selection guide methodology. So with the SSGPlus, we are making an assumption that you know something about the SSG methodology and now have a faster workflow where the basic data and calculations are on just 2 screens. The third major portion of the tool suite is the stock comparison guide, and then fourth and fifth are the screening and stock ideas tool and the portfolio management tools. All stock tools automatically integrate with Morningstar stock data. There is no extra fee or downloading to use the data in the tools. Along with the stock tools, the Plus membership includes a plethora of web-based webinars, classes, and a company research page. And remember, no matter which tool you use, the core SSG or SSGPlus, they are the same basic methodology. They use the same data, and you will get the same results out of the process. So you can switch back and forth between those tools if you so desire. I'll demo that when we go live. Let's give you a little bit of an overview of that quick start guide that I mentioned. This is what it looks like. And if you happen to attend an in-person event, you might be able to pick up one as a nice printed copy. The one that you might want to download is a bit easier to print out at home, and it fits on a regular sheet of paper. We have a number of quick start guides available, generally one for all of our products. And what they are is an easy step-by-step way of getting from start to finish in a particular tool. So, for example, this SSG Plus Quick Start Guide gets you through doing an SSG in 8 steps, and that's exactly what we're going to show you tonight. The guide is always available in our Help and Information tab, and I will show you that when we go live into the tool. The Quick Start Guide will show us how to access, how to open a new or saved study, how to visually analyze history and quality, how to review some peer data to check things like industry averages, how to forecast sales and earnings, which are the first 2 of our 5 forecasts we need to make, how to review PE history and forecast our high and low prices, how to review our potential return, and then how to save, share, print, and do some research. We'll actually be doing some research all along the way as we go. This is a screenshot from our member homepage. The links to the online tools are up in the gray box in the upper right-hand corner. The stock selection guide is the primary tool we'll look at tonight. If you want to access that tool, enter a ticker in that white box that says Launch SSG, enter ticker here, and then click the green Go button. The blue magnifying glass is for our screening tools. The SCG is for our stock comparison guide. CR is for the company research page, and the question mark icon is for our tools help page. Again, what we're going to do is enter a ticker in that white box, click on the Go button, and start our study. Before we do that, I want to give you a very basic overview of the parts of the SSG Plus app and the very first page. We're going to be spending a lot of time on this very first page called Analyze Growth and Quality. And so let's get it done here where it's all labeled up nicely. First, I want to point out that if you open the tools and your screen doesn't look like this and say SSG Plus in the upper left corner, then you are not using SSG Plus. You can switch views with this radio button and switch back and forth from core SSG to SSG Plus. If you don't see these radio buttons and you don't see SSG Plus, then your membership doesn't include SSG Plus. But don't worry, just watch along tonight and learn. If you'd like to upgrade, drop me a line in the question box and I can help you with an upgrade. At the top is the navigation. This is the main chunks of our SSG Plus. Tonight we're going to be spending the most time on the first 2 tabs. The first one is Analyze Growth and Quality, the second one being Valuation and Return. On all of the tools or apps that we have side navigation with the tabs on it, and it's very much like what we see on the home page. There is actually a folder here where we look at my studies, magnifying glass for screening and stock ideas. Here's our SSG tool, here's our stock comparison guide tool, and our help function tab is down at the bottom there. Across the top in every tool in the upper right are a series of menu items. They differ slightly between the different tools, but generally there's files and tools and preferences and things like that. We'll hit those options at the very end of our live portion of the webinar. Here on the Analyze Growth and Quality screen, which we know we're on because it's colored in green, we have a big graphical display of data in kind of the center section of the screen. The lines showing are the default lines of the green sales line, the purple pre-tax profit line, the blue earnings per share line, and black price bars. So that is the default. We have a tabular data display of data below that, which shows pretty much the same numbers in a table format. On the right-hand side, we have 4 main panels. I'll talk right now just about the legend panel, and we can turn lines on and off with the legend panel. Here's our button to help us compare peers. Here is our trend line or our projection start point adjustment that we want to make, and recent quarterly figures. And again, we'll cover those live. So with that, any questions before we go live, Ann?
Not at this point, Susie. Let's just get right into it.
Okay. And I'm going to bring up our member homepage and give you a second. Make sure you guys are seeing that. There we go. All right. Looks good. I am logged in to the Better Investing website here. You can tell because my name is there. If there's no name here and it says login instead of my account, you're not logged in. So go ahead and log in. And on the member homepage, you will see this gray box in the upper right. And I am going to enter my ticker. Let's pretend I didn't know the ticker symbol. We're going to cover Visa. I can type the company name, and there it is. I can just select V for Visa, or I can put V in there, and click the green Go button. Now, what's going to happen here on my screen is in the upper left, you'll see I have spun off a new tab. My member home is still the first tab. The second tab is the stock selection guide, or SSGPlus, and that's where we're going to start working. So you'll see that we came into the study and we're all at the Analyze Growth and Quality tab. So it should look very much like the slide I showed you earlier. Let's start looking at what some of the interactive components are. If I mouse over the company name of Visa, I get an informational panel that pops up. It shows me the closing price, the fiscal year end, the industry, which is credit services. We're going to use that information a little bit later to look at some industry averages. The company size, this is a large size company, as is our designation for anything with over $10 billion in sales in the last fiscal year. The Morningstar Financial Health Grade, and a short description of the company. Visa being the largest payment processor, taking tons of volume in payments, over 200 countries and 160 currencies. So of course that's going to be unique to each company that you look at. Now, in SSG Plus, we're not doing it step by step. Everything is on kind of this page and the valuation and return page. So on this page, again, here is the graph. If we want to add more items to the graph, we're going to click on the grayed out items that are in the legend. So I can bring up, for example, book value per share, turn that off. I can bring up shares outstanding, turn that off, and so forth. I want to point out on the price bars here, let's kind of dig in a little bit deeper. And what are all these lines and what they represent? The price bars here, this is the range in price over each fiscal year, not calendar year, but fiscal year. And this last one is the 52-week price range. So for this company, it ranged from $216 up to $290 and change as far as a stock price. The crossbar is where the company's latest closing price is as reflected in the study and where it falls on that graph. So we're kind of near the upper end of the 52-week trading range, and the closing price being $281 and 21 cents. Now, obviously, you're noticing that as my cursor moves around, there's boxes that pop up. That is a feature of this graph, and I can mouse over anything and see what it is. The dark green line here is our sales, and for example, in 2019, the sales was $22 billion and change. In the latest fiscal year, let's see if I can, everything's kind of on top of each other here. $32 billion, 653. And that matches what I see down here in the historical sales line in the table section. $32,653,000,000. So that's what this dark line is. That's our revenue line. The dark circles, completed and filled in circles, are the annual data. But you'll see here at the end of the line, we have an open circle. That is the trailing 12-month quarterly data, and it's marching right up along in line, which we like to see. There is a thin line that runs through the middle, which is the trend line, and that's a line that is calculated to be in the middle of all of that data, and that gives us, the slope of that line gives us our growth rate. It's called the least square. So really the sales are marching up at 10.7% over all of this data. Similarly, pre-tax profit and earnings work the same way. We've got the closed circles for the annual data, open circle for the quarterly data, thinner line for the trend line. What are these lighter lines here? They are the EPS analyst estimates graphed on our graph. And so what that means, and you can see under earnings per share, it says 2028, 16.3% growth. And what that is this 16.3% growth that are from the ACE, or analyst consensus estimates. Those are given to us from Morningstar. They are investment or financial analysts, investment bankers providing their estimates to Morningstar, who then averages them and gives them to us in our data feed. These are not numbers that are generated by Better Investing. They're from Morningstar. And they are graphed in the lighter lines here. Then we have some dashed lines. Those are my projections. Well, it says 0% growth, of course, because I haven't made any projections or forecasts yet. So they're just flat lines. As soon as we start making projections, those lines are going to change. We want to point out that if you have some kind of data that is an anomaly, you can take an outlier. And to do that in SSGPlus, we're going to click on the x-axis number. So 16 for 2016, I click on that, and the dark closed-in circle goes away. The line goes straight from 2015 to 2017, and the growth rate changes. Let's take a look at that for earnings. Earnings is now 10.8, I'm sorry, pre-tax profit is now 10.8%. If we turn it, click on it again and restore that data, pre-tax profit is 11.6. So whatever data you take out as an outlier, the growth rates are going to be dynamically changed based on what data is there to be put in the calculation. We can also take out outliers individually. Let's say there was something about 2016 earnings specifically, but not the other data. The red line indicates it's taken as an outlier. The growth rate has changed. Let me restore it. And the growth rate returns to 16.4%. Hopefully that's not moving too fast for you. I know I can do it quickly, but it takes a while to replicate and see it on your screen. Okay, outliers. Want to take a look here at recent quarterly figures. So we have a little table that talks about the quarter that was recently ended in December 2023, and in that quarter the company reported $8,634,000,000 in sales. Compared to the previous quarter, that was an increase of 8.8%. We're going to use that information when we start our forecasting. Similarly, EPS grew at a 20.1 rate this last quarter compared to the year ago quarter. And there's that box. And I'm looking at my notes here. I think that's all we needed to talk about here.
And while you're pausing there, could you just repeat? There's been a couple of questions regarding how long are those long-term estimates for earnings per share?
Right, great question, popular question. Analyst consensus estimates, all we receive from Morningstar is a 2-year estimate. And so we extract that, we take that growth rate, 10.2, and we put it out 2 years here on the graph. Long-term has a very fuzzy definition in the industry, and it's 3 to 5 years. Now we will expand that growth rate out and as if it were the 5 years, but the analyst puts it in as just a long-term estimate. So we don't know if he or she was thinking 5 years or they were really thinking 4 years for that estimate. I hope that helps.
I'm sure it does. Thank you.
Okay, let's move on and take a look at the other factor that we're looking at when we first start our SSG. Do we have a growth company? I see lines that are up, straight, and parallel. I see a large size company that's growing at about 10 or 11% over the last 10 data points. And that sufficiently meets our criteria for what we're looking for in a growth company of a large size. It more than meets that. Let's go down and see some of our management indicators. So this, in the traditional SSG form, is section 2, where we're evaluating management. We moved it up into the analyze growth and quality because we felt it fit better, and we could analyze these things at a glance, or not at a glance, but analyze these factors before we got into forecasting and valuation. So what we're looking for in evaluate management are 3 main indicators: pre-tax profit and sales, and we're looking for that to be even, relatively even in values, or increasing. Increasing's better. In this case, we have a 5-year average, the most recent 5 years, of 64%, and it is about the same as 2023. So we're going to call it even. And if I mouse over this yellow little chart, which we call a spark line, the words come up and they say trend is even, and the graph is yellow. Yellow is not bad. Yellow is just fine. Yellow means even. Looking at return on equity, the second of our factors or indicators, we're again looking for something that is stable, if not increasing. Increasing is better. But we're also looking for a number that is mid-teens or higher. And in this company, we have numbers that range in the most recent 5 years from 34.3 to 45.3. And that meets that criteria just fine. In this graph, we see it's green. And if we mouse over, the trend is up. Green means up. So at a glance, I can look at this and say even, up, or good, trending in the correct direction, because here comes debt to capital. We don't want so much debt. So we're looking for even or trending down. And what we see is a range of debt to capital that ranges from 32.5 to 39 or about 40. Looking at the 5-year average compared to 2023, 2023 is lower. So it's trending in the correct direction, and the trend indicator says down if you mouse over it. It's green, though. It's telling you it's in the correct direction. One other thing to think about as far as evaluate management and debt to capital is ideally, we'd love to see these numbers be under 33%, as less than 1/3 of the of debt to capital. But we also know that this depends on the industry. And so we're going to take a look at how this company's debt and pre-tax profit is also industry dependent, how both of these compare to the industry. And to do that, we're going to take a look at comparing peers and click on this compare peers button. We'll bring up the peer pop-up panel and see that the app has picked 3 peers for me already. And how it picks them is that these are companies in the same industry of credit services of the same size, meaning large size companies, and they are ranked by earnings per share growth rate. So, meaning it's picked the top 3 based on earnings per share growth rate. Okay, it has picked MasterCard, seems similar to Visa based on what I know. Discover Financial Services seems similar. PayPal, they also have credit cards. They are in the credit services industry as categorized by Morningstar. But if we had a different idea of what was here, I could change peers by erasing PayPal and putting like American Express in, but let's pretend I don't know the symbol. And I can start typing the name, and there's American Express. And then I click Update Study, and now the AXP or American Express data is in my peers. So here's AXP in the legend. I can click it on. Now I talked about 2 different quality indicators that we'd love to compare to the industry, and one is pre-tax profit on sales. Here's Visa in black, and I'm going to click on industry averages and see that Visa's pre-tax profit is well above the industry average. Visa's in the mid 60s, industry average is 25 to 40, depending on the year. We can turn on the other companies individually if that's helpful. Sometimes we discover a great company in this way, but you get the gist here. We're going to compare to the industry. Same thing with debt to capital. We turn on debt to capital and we see that out of the industry average and all of the peers, Visa has the lowest debt to capital. Now you might be looking at this and saying, what is the peer group average? Is that the average of all of Visa, MasterCard, Discover, and American Express? No, it's not. A peer is something that we call in the same industry of the same size. So this is just large peer group average. This is for the large size companies. But either one will generally suffice for checking debt to capital or percent pre-tax profit on sales. Now, what if you don't know? This is kind of an easy example of peers, but what if you don't know the peers for a company? Well, the app is going to do most of the work for you. They're going to pick companies from the same industry that are of a similar size, but you want to double check because some people like to double check. I'm going to point you in a couple directions. If you go to research up here in our menu options, you'll pull up our research panel. It will drop down a number of different options, and I'm going to go mouse over company summaries and then point you to the Morningstar summary, which the website will open in again a separate tab where we're at the Morningstar website specifically for Visa. So all of our research links point you to a specific site. And then moving down the page, the Morningstar page a little bit, what we're going to see is a block that says competitors. Much of similar concept, much like peers. So that might provide you some ideas. If I go back to my SSGPlus study and do research again, company summaries, and then go to the Yahoo summary, we'll get another idea. And here we are on the Yahoo Finance page for Visa. We're going to scroll down and go kind of halfway down and see people also watch and come up with a list of ideas or similar to Visa. Now we don't know exactly their algorithm for picking similarity, but these might provide you some ideas that you might want to plug in as a peer. You can plug in anything you want as a peer, doesn't matter what size it is, doesn't matter what industry it is, the app will let you do it. We think the best benefit comes from when you're comparing companies within the same industry though, to look at your peer comparison. Okay, so that's the basics of what we're going to talk about. Oh, I have one more thing. Peers are saved with the study. And we can see here we have a big yellow alert that says your study is not saved. Click to save. Okay, I know I'm going to finish out this study and save my projections, so I'm going to save it now. You can save it at any time. If you're serious about this study and you know you're going to move forward, I would recommend you save it sooner rather than later. I click on that yellow box and it brings up a pop-up that says, by default, the new study name is the ticker symbol V, the date you created it, which is today. Now, if you update your study data, this does not change. This is fixed. So you decide how much benefit it is for you. I usually put my name on here because I personally do a lot of studies for other people or testing or something like that. But, or we could say something like, in the webinar. Another option that you have here, if I have a portfolio already set up and I want to save directly to the portfolio, I can do that. It just so happens I do, and I'm going to save it to my Susie test portfolio. And if I have another Visa company in that portfolio, I can replace it. I don't in this case. I can put the number of shares. I am just going to put 1 share so it makes some portfolio reporting better, but you don't have to fill out this field at all. You don't have to put it in a portfolio at all. Regardless, I've picked a portfolio to put it into, and I'm going to click Save. Okay, now with that, we are going to start forecasting. Before we do, Anne, do we have any questions?
Not at this time, Susie. Oh, wait, something just came in. Just as we were speaking. How did you get the peers on the screen?
Okay.
One person, maybe you could just quickly review that.
Yes, we have this blue button here called Compare Peers, and I just pressed the button and up popped the Compare Peer panel pop-up. So I hope that's what answers the question as they were looking for. If not, please write in again and we can be a little more specific.
All right, thank you.
Sure. So the next step in our stock selection guide process, after we're fairly confident we have a growing company that is of sufficient quality that we want to continue and keep researching, the next step is at your leisure, you can research the company some more, but in the stock selection guide process, we need to start making forecasts. There are 5 forecasts. We also use the words projections or judgments. So just know that if the company pays a dividend, as Visa does, there's 5 places that we have to hit and make some judgments. But this is not a judgment class. We have a lot to go over. So I'm going to ask you that if you want to learn more about how to make your judgments or forecasts, that you review the Intro to SSG or Adding Judgment series in our video learning library, or hit up and attend the Ticker Talk or Stock Up webinars, or review them after the fact. And you'll get lots and lots of great tips on how to make your SSGs more robust. The green boxes indicate where to enter judgments. And I see 2 of them here. One is on the sales line and one is on the earnings line. Now, you can do them in either order, but you're going to get the most value if you do sales, because sales drives earnings. So I'm going to click to enter my sales forecast, as it says. Up pops a box, and then I'm supposed to enter a number. Great, how do I know? So I'm going to forego that for a second and talk about a lot of different references that I have for how this company might perform in the future. We love studying quality growth companies because future performance might look a lot like past performance. Not a guarantee, of course. But I look at past performance and I have a growth rate of 10% and change. I love big round numbers, so I'm just going to call it 10 or 11% here. Over the last 10 data points. I look at the quarter over quarter number here, that's almost 9%. I look at the Morningstar analyst estimate number, it's about 10%. So I have a 10, I have a 9, I have almost an 11. Now I am getting into a little bit of the methodology, but I also want to point out that we have research links that lead directly to analyst estimates. And so I'm going to pull out like the Yahoo analyst estimates, where they do make a revenue estimate. I click on that, it opens in a new tab, and I'm at the Visa analysis. Visa analyst estimates. Okay, I'm going to go down a little bit into the second box where it says revenue estimates, and there's a table that says number of analysts, average estimate, low, high, year ago sales. I want the growth rate estimate. For the current year of 2024, it's about 11%. For next year in 2025, it's about 10%. So I've got all these kind of numbers coalescing around 10, 11, 10, 11, 9. I have chosen 9 to put in for my forecast. I feel it's closer to the most recent quarter over quarter estimate or actuals. But let me show you a quick tip using our quarterly data. And that is, I often go to the quarterly data tab at this point, and here I am on the quarterly data tab. It's turned green, and I want to check my estimate against the company's actual performance quarter over quarter. To do that, I'm actually going to turn off the earnings. I'm going to look at sales, and I see it went down during the pandemic and then came up quite robustly in terms of growth rates, but it's been on a decline for 7 separate quarters. Well, how does that compare to my estimate? I'm going to click on sales growth line, and there is my estimate. And you can see it's getting very close to my estimate. Now, these numbers are the trailing, some of the trailing quarters, that's SUM. And I'm also going to look at each individual quarter. And I see that, yes, it's been going down for a number of quarters. Now, this could be concerning. I will need to do more research about what the company plans to do about this. It could be that a number of these very robust quarters were the result of coming out of some very bad data during the pandemic, but I'm a little concerned moving forward. So my growth rate is 9%. This last number is at 8. Let me turn off the sales growth line. Everything's on top of each other. 8.8%. Remember that number from our quarterly figures? There's 8.8%. Same, match. So the company has beaten this 9% mostly over history, except for the pandemic, but I think they're going to be still working around 9% going forward. Now, I will tell you as a clue, the company has given some guidance, and they're saying high single digits, low double digits for revenue growth in the next year. They don't provide any guidance past 2024. So I did some research, and I'm comfortable with 9. You just need to be comfortable with a reasonable number that makes sense to you. So estimate number 1 is done. Now I'm going to move on. Oh, I do want to point out that if you're interested in more ways to use the quarterly data tab, there is a class in a Ticker Talk from June 2020 on how to use quarterly data effectively in your stock selection guide analysis. Now I'm going to do forecast earnings. So before I do that, I'm going to gather my numbers. I've got like a historical growth rate of 16.4. I've got a long-term estimate of 16.3. I've got a year-over-year actual of 20. I'm going to look at Yahoo again for analyst estimates. And in this case, when I'm looking for long-term earnings growth, I'm going to scroll to the bottom of the page. And where it says growth estimates, These are earnings estimates. If it doesn't say anything like sales or earnings, just know that they mean earnings. And the next 5 years per annum, they're projecting 12%-ish. So 12%, I've got a couple of 16s, I got a 20. Let's get one more in here and go to research, analyst estimates, and Zacks. Zacks provides a 5-year earnings estimate, and under detailed estimates and percent earnings per share growth estimates here, under next 5 years, we see a 14.6. So we've got 12-ish, we've got 14, a couple of 16s, and a 20. They're kind of all over the map, but I'm going to show you one more way, and it's my favorite way of determining earnings per share estimates. And to do that, we're going to click on the earnings per share green box, and up pops a kind of a earnings per share calculator, and that is called the preferred procedure calculation here right in the center. And what it is like a mini income statement or business model, and it's very similar to what people do, investment bankers do when they make models to do their analysis. And what we're going to do is start with my revenue projection, which is 9%. We're going to subtract out expenses by taking a look at that pre-tax profit margin. Okay, great. I want to take a look at, I'm going to go over here to the right-hand panel and say, what has pre-tax profit margin been looking like? Here's a graph of it. Here's, and we noted it's been increasing a little bit. I'm just comfortable taking this 64 up to a 65. And again, here's where I'm finessing it, and it's me, and where this is not a judgment class. I'm just showing you what I would do. If you're interested in the preferred procedure, there is a class in our video learning library that was done February 2021. So again, search the website for preferred procedure, and you'll come across that class. Taxes, all the companies usually pay taxes. This is a little lower than the standard statutory US tax rate, but remember they're selling into, or they're doing business in other countries, which tends to lower that. Regardless, what I see is that 17.9, we're higher than that for the trailing 12 months in the last quarter. So I'm just going to nominally bump that up to 18 because I love my big round numbers. The company does not pay preferred dividends. So our next input is diluted shares outstanding. And we see a graph here that the diluted shares outstanding have been lower and lower. The company has a history of share buybacks, which reduce these shares. So will the company continue? And I did a little bit of research in their last press release from the last quarter and found out that they have a $25 billion share buyback program. And at today's prices, that's about 90 million shares. So I'm going to be a little more aggressive and take that 2045 down to something like 1960. And then see that my projected growth rate based on my model here is almost 10%. Still pretty low compared to everything else. But regardless, that's what I'm comfortable with. You could justify your number that you'd like to put in this box by saying, well, I'm going to go with something that's a little higher because I have all these other sources that indicate they expect more out of the company. That's fine. And this is where I think is reasonable for me at a 10. And then I'm going to update my study. And then that 10 is going to be my input for earnings per share. Now, before we move on to valuation, Ann, do you want to cover any questions right now?
Yeah, there's one that is really apropos right here. Let's see. what is the significance of selecting the projection starting point? Briefly, I'll
Oh,
say.
great question. And we're right here, so let me show that to you. I do want to demonstrate that my 10% forecast growth rate yields $14 5 years in the future. So what I mean is if you start at $8.69 and multiply it by 10% or 1.15 times, you end up at $14. Now I am projecting from the last quarter. So my starting point is $8.69. If I start at the last annual, that goes backwards a little bit, the number's a little smaller. It's 828. It starts here at the last annual, 828. I multiply 828 by 10%, 110% every year, and I end up with $13.34. So it's going to be a lesser earnings per share number, depending on, or greater, depending on where you're projecting from. In this case, trend doesn't have much of an impact because we see our trend line kind of right on top of everything and aligning with the last annual. So I rarely use the trend line. My default is quarterly. And if you want to set a different default, you're going to go to Tools and Preferences and set your projection start point to something else. The second most popular choice is annual, but by default, we set the app up to default to quarter, and we believe in most cases for a quality growth company with up, straight, and parallel lines that is the best choice. Would you have anything to add to that?
Not at all.
Okay.
It sounded great. Very good.
Okay.
I mean, it's right. I mean, maybe I'll just add one little thing. If you're going from the most recent quarter, remember then you're going out a full 5 years from the current quarter. And you can see that on the chart there because it's really kind of out there in the first quarter of 2028. Whereas when you're going from annual, you're just going from that year end to the end of the 2027 year end. So it just pushes it out further. So if you've got quarterly data, I like to give a growth company credit for that and project from that point. So
I do too.
That's it.
Okay.
That's it for now. We're going to save this other question for a little bit later.
Sure. Okay, so moving on, we have 2 of our 5 judgments made, and I'm going to turn to the valuation and return tab. That turns green. We see no more graphs. I'll show you where there's a few located on here, but it's really kind of a worksheet. And the top section, section 3, is a worksheet of the price earnings history, and we're going to use that to help us project high and low prices. So let me point out 2 important columns here. Column D, hopefully you can see my cursor, is where the high PEs for every year are listed. High PEs for 2019, 2020, 2021, and so forth. The 5-year average is in this blue shaded line, 37.7. The PE for the current 52 weeks high and low is about 33 for the 0.5 for the past 52 weeks. Similarly, column E is the low PEs for each year. Here's the 5-year average and the current, meaning or trailing 12 months. So it's about a 25 PE over the last 52 weeks or trailing 12 months. Please note that we have a radio button here that will switch from 5 years to 10 years if you want to see a longer term view. What we see for Visa is that the numbers for 10 years are just a little bit lower, but not by much. It's a pretty stable company. And we do say that the near-term years are the most important. So I like, for the most part, keeping my selection here at 5 years. So I'm going to put a pin in this, and I'm going to go down and show you how we use that. When it comes time, our next projection, when it comes time to make our next projection, we're looking to establish a high price for the next 5 years. And that's in section 4, and that's point number A. And how we do that, we're going to forecast an average high PE over that might happen during the next 5 years times my estimated high earnings per share. Remember that $14 we were talking about? Here it is. So hopefully we're going to hit $14 in the next 5 years. And we multiply both of those and come up with a high price. So here's my input boxes. And now I have to put something in the average high PE forecast. Well, now I'm going to go back and look at my data. Whoops. And I can, I see 35, 44, 33, 30. 5-year average is 37. I feel like the last 2 years it's been coming down a little bit, but then in the last 52 weeks or last 12 months, it's maybe risen up a little bit. So for me, I feel comfortable putting in a 30, I said 35 in my notes, but I'm going to use 34 as my high PE. And I'm going to click on and update my study. I can click anywhere in this panel and then the math will happen. I'm going to update my study and see my high stock price being 476. Now, I see an invalid for my zoning. That's because I have not finished my stock selection guide and finished and put a low price in. So let's go ahead and select a low price. Low price has much more text here, but 90%, 99% of the time for me, I am picking in section 4, option B, part A, which is a very similar calculation. You take the average low PE times the low earnings per share to forecast a low price. Well, let's take a look at that. Up pops a panel, and here's that basic calculation. What do I put in for low PE? Notice that you have some helpful tips on these panels, and that the 5-year average low was 25. The 5-year total average PE of all the PEs, high and low, is 31. The current PE is 32. I'm going to go back and look at that data again. And looking at that data in column E, I see 22, 27, 31, 25, 21, 25, basically a 25. Again, it seems to be heading a little bit lower, so I'm going to be putting 24 in here. That seems reasonable to me, but another number might seem reasonable to you. Now, where does this low EPS forecast come from? That was the end of that quarter, the trailing 12-month earnings per share that we had. And because we're working with a growth company, we expect earnings to continue to grow. Therefore, the trailing 12-month earnings number should be the lowest we have in the next 5 years, because we're expecting management to continue to grow earnings quarter after quarter. So that's where 869 comes from. And we see the forecast low stock price comes out to be 208. Does this seem reasonable to me? I'm going to look at some of these other reference points and say, well, the 52-week low is 216. That's fairly similar to 208. The current closing price as of yesterday was 281. 208 seems reasonably low compared to that. I mean, they're not right on top of each other, so I'm comfortable with that. I kind of ignore this average low price of the past 5 years. It's been part of our methodology for a long time, but it seems very conservative in this case. So I'm going to stick with my 24 PE times my low price and have it be 208. Now, I'm going to go back into that panel and show you something. I have a block here that says auto update to trailing 12-month earnings per share. And what that is doing for me, I can toggle that. So it says manual but I'm going to keep it at auto update because what that means is every time I update my study for new quarterly data and I get another quarter in and this number grows, the trailing 12-month earnings grows, it's going to be put in this box. The new number is going to be put in this box and my low price will bump up a little bit. And that's what I want to have happen. It's just one more thing that I don't have to worry about and transfer a number into. So I'm going to, by default, studies are set to auto update. Again, this is a feature that you can, there's a preference setting for under tools and preferences. If you always want to set your low earnings per share forecast, you can change it to manual as an overall preference. Okay, so I have a high price, I have a low price, I'm almost there. I have one more projection to make, and that is made for companies that pay a dividend. And what we want to do is establish a reasonable percent payout. Sometimes the percent payout can go wildly out of whack if the company's earnings per share are very low, but the company continues to pay out a normal sized dividend for them. You'll get huge payout numbers here. I mean, 2,000%, because I've seen that. I think Starbucks was one of those that one year had a large legal situation. They paid out a bunch of their income to pay off the legal situation, making their earnings very low, and the payout was, as a result, very high. Payout, let me back up, is the amount of dividends in column F divided by the earnings. So if earnings go very low, the payout's going to go very high. In this case, it's very regular. I will tell you that Visa just increased, had a fairly, a little bit higher than normal than dividend increase, but you can see they've been paying out about 22% of their earnings, and now it's bumped up to something like 24%. On average, they've been paying out 21.8. I don't feel compelled to make that much larger, so I'm going to use 22 as my percent payout. And the payout judgment is all the way down at the bottom. And I'm going to put 22 in here. Perfect. Okay, with that, we have a quote unquote finished. We finished all 5 judgments on our SSG. In section 4, we can look at zoning and see that we're in the hold zone. And D, section D, we can see our upside downside or potential gain versus risk or loss is 2.7 to 1. We're actually looking for a 3 to 1 as a nice guideline on when it might make sense to consider a purchase. Visually, here's how it looks. Here's my low price of 208, my high price of 475. The current closing price, as it is listed in my study, is at 281, and you can see I'm near the bottom of the hold zone. If the price drops the prescribed amount, whatever it takes to get it into the buy zone, of course it will be in the buy zone. Where this current price is on this chart, visually, you've got 2.7 times more space to gain as compared to the space you have to go down to your low price. So we're looking for this to be a little bit lower. They will coincide with your buy zone, and we're looking for a 3.0 as a nice guideline here. You, of course, can do what you need to do as to where this company might fit in your portfolio. So we have a hold, 2.7, and a basic total return of 11.7%. We do offer this compound annual return using the forecast average PE, which some people like to use, also known as projected average return, as 8.4%. It's typically a very conservative measure, so I don't use it. I typically just base my decisions off the total return, but the other one is there for you if that's what you like to use. And with that, I noticed that there was a question about member sentiment. And do I use them? This is the point that I use member sentiment. I check my work against the community, and the sentiment tab is up here in green. And I'll look at sales growth rates. So remember, I picked 9 out of 662 studies, which we've taken out 225 outliers. So 662 studies that are well grouped within the last 90 days. And I'm looking at, I look at the median or the middle number, not the average or the mean, but the median or the middle number. And please, if this intrigues you, run your mouse over or your finger over these descriptors, what outliers are, what how we determine these calculations. There's an FAQ you can link off to and so forth. But generally, I'm looking at the median. So the community is a little bit more aggressive. But you can see the spread in the community. So 250 were between 9.1 and 10.1, 279 were between 10 and 11. They're very, very well grouped. On the earnings per share side of the world, 12.5, mine was 10. I'm comfortable with my number. High PE, I was a little more aggressive, it turns out. I picked 34 and the median was 32.7 or 33. I don't much look at high earnings per share because that's a function of my starting point and my earnings per share growth rate. So I kind of skip over that. I mean, high price, people are picking higher prices because of the higher growth earnings per share growth rates than I am, but that's to be expected. So I'll look at my low PE that I entered. I used 24. The community is a little more aggressive at 25, but you know, these are picking nits when we're talking about 24 and 25. They're both reasonable numbers. Low price, mine was 208. That's what the community picked. But you can see we have some people that are significantly lower in the mix, in the data mix. This is a histogram of where data falls. The payout ratio, most people stuck with the default of 21.8. I increased it a little bit. In total return, the community is saying that at 13.6, that might be a reasonable expectation for total return. So that's where I use member sentiment. Okay, before we move on to some other things, any more questions that we should go through right now? Are you muted?
Yeah, I was talking into my muted microphone. Thank you very much.
Okay.
Very eloquently too. Yes, this is in regards to the PEs. Do you ever look at the current PE versus the 5-year average, and what might you look for there? Just in general.
What I do look at this current PE here that is, you know, has roughly aligned with the last 52 weeks. Is that what we're talking about?
I think the question is about 32.4, the actual the 32.4 right now versus the overall average PE.
Oh, I do, and I mean, but to me that's a one shot. Oh, 32.4 and the overall average was 31.7. It might be a little overvalued slightly. I mean, these are not terribly different numbers. Right. So I do, but they don't I don't necessarily use them to help pick my projections.
Okay. Just to see maybe if it looks good or not, even before you do your projections.
Right.
You know, how is this going to turn out?
Go through and follow up with my projections. But yeah, if it's wildly different, if these are, you know, if this had 45 and the 5-year average was 25, it's like, oh, should I even put the time in? Yes.
Right. Right.
But watch lists are a great thing. You can put all kinds of dreams on your watch list.
All right. In the interest of time, we're going to move on. And if we
Okay.
have time to address some of these other questions at the end, we will.
Okay, so we've spent a lot of time getting through our stock selection guide. I'm going to spend a little bit of time showing you some of these other tabs. And I'm going to start with the ratios tab. And there we have a number of different valuation ratios. If this looks like something that intrigues you or you have used in the past, again, avail yourself of this mouse over so you can learn more. Also, in a recent ticker talk, I did a talk on how to use the valuation ratios, and search for that in the video learning library. Liquidity ratios are here if you're familiar with or like to look at current ratios or quick ratios. I'd love to see these a little bit higher, especially the quick ratio, but they're kind of holding their own. Interest coverage, as the mouse over mentions, indicates a company's ability to pay the interest on its debt. And what we're looking for is double digits, meaning 10 or more, are just fine. So Visa is doing very well in this category. We talked about member sentiment. I'm going to show you, we do have a historical data audit and a forecast audit. And I'm not going to get into each one of these in great detail, but it brings up things for you to check. These are not stoppers for you studying a stock, but they're things that you need to research further. So let me just give you, there's plenty of text here that for you to read, and let me give you an example. So here's, hey, you need to review more than 1/3 of this company's capitalization consists of debt, because that debt to capital number was 34.6. You may want to consider the nature of the industry and the company's prior track record to determine whether this is acceptable. So it gives you some clues about what to do. We did both of those. We compared it to its peers, we compared it to the industry, and we looked and saw that the debt was stable, if not decreasing slightly in the last quarter. So that's how you're meant to use this page. Once you have made forecasts, you'll see some items show up at the bottom. This one is kind of a thought starter on, do you want to rely upon investors paying more than 30 times earnings? At my average high PE forecast was 34. That seems a bit high for a well-established high large company. And yeah, I'm okay with that, because that's where the company has been trading for the last 10 years. That's kind of helpful where the 10-year number comes in. And a little bit of a warning that if you purchase at the current price, well, I have no intention of purchasing at the current price. I tend to follow my stock selection guide and purchase when it's in the buy zone. So just a number of items for you to look at. Now I can show some examples which bring up, I think there's 15 items that it's reviewing against on the historical data, and probably 6 or 8 on the forecast side. So just take a gander there and double check yourself. Notes. Lots of people making notes about Visa, and a note is simply a place where you can make your own new note and put anything that you want into it. You can paste into it. I think it's a maximum of 2,000 characters. Save the note. Let me put in something here. And then it's there for you and will be saved in your study. Now, many people have put in notes that they feel are valuable for the whole community. And in that case, you could make your note a community note. I will not be doing that with my little note here, but feel free to share your helpful note as a community note. And I do want to talk about, speaking of sharing, let's say I was telling Anne about this great study I did or this great company I found, and I wanted to do more than tell her, I wanted to show her. I can share my study with her or with my investment club by going to File and Share Study. And when I do that, I can pick what I want to share. Now, my investment club and Anne both have access to core SSG or SSG Plus. So I'm not even going to get into sending them a copy of the SSG PDF. I'm going to simply send them a copy of my online study. And when I do that, a copy of it will go into their account and they can look at my SSG. If I wanted to also send a PDF, I can do that. There are also a number of other options we can choose from to attach along to this email. So it's sent as an email. I'm going to select my recipients. And, I'm going to select Tommy Bahama and Anne and Jane Doe and John Doe. And out of my address book, and then write a personal message and share that study. And they will receive an email with an attachment with the PDF of the SSG. And because I shared an online study, also, they will receive a link to import my study into their account. A couple of other things on the menu I want to make you aware of. Under the data tab, there are 3 basic data tabs. The company basic data gives basic data about the company. You cannot change the ticker. If the ticker does change, we will change it automatically behind the scenes for that particular company. But if you want to change the company's website or who it's prepared by and so forth, the most common use case for changes here is to update the price maybe to an intraday price. Maybe it fell from 280 to 270, and I'm going to update my study, and that is going to change my study and make this a buy because now my closing price is at 270. So the changes that you make in any of these data panels will be applied directly to your study. If I wanted to change earnings per share and use the non-GAAP or adjusted data, I can do that. Let's say 828 becomes 1050 for earnings. And I can click off. And as soon as I do that, you'll see that the status is user modified. The U stands for user modified, and the data is locked. And I'm going to update my study. And then what we're going to see is that here's that $10.50 that I adjusted. You can also adjust quarterly data in the same manner. Now, if I want to update the data in my study, and I'm already in it right here, I can go to data and refresh study data. Whoops. And little green alert here says study contains locked data. And because I changed that earnings per share value and I showed you how it was locked and it was noted as user modified, in that case, the locked data by default is not overwritten when I refresh my data. But if I want to go back and unlock the data and update all company data, I can do so. This is particularly helpful. Usually you're not going to do this. Usually you're going to say, yep, I locked it for a reason. I changed it. I want it to stay changed. And then you'll just refresh your data. Now, I didn't lock the price, so my price is going to go back to the 281 when I updated my data or refreshed it. Refresh and update mean the same thing. One more helpful area on research, I do want to point out some of my favorites where a link to the Seeking Alpha call transcripts. The latest one is free for you to view. Filings, if you want to look at 10Q or 10K, you can go to a company-specific page on the site that's just for Visa, and there's all the 10K statements. So that has been very, very helpful to me. All right, before we go back to our PowerPoint, do we have any other questions?
Everybody's keeping up. I'm going to say no, Susie. Let's just move on.
Yeah. All right, thanks guys for sticking with me. And let me go back to the PowerPoint. We went live where we've talked about questions. Please fill out the survey when you leave the webinar. You'll be asked to fill out a survey. So please do that, or please feel free to send in class feedback to service@betterinvesting.org. And here are the resources that I mentioned that were in the handouts about more on the SSG methodology. We have a wonderful introduction to the SSG series of 4 webinars. Your local chapter can definitely help you find your way through. If you have an SSG question, reach out to them by going to chapter website. Better Investing magazine always has helpful resources in it. If we're looking at portfolios and how to set one up, there is a portfolio tools tutorial in the video learning library, so avail yourself of that. We also have using PERT to perk up your portfolio, screening and stock ideas tutorial, using quarterly data to enhance stock analysis is another one that you might find useful as an integrated piece of learning attached to the stock selection guide, or an SSGPlus in particular. And with that, I am done. Anne, anything back to you?
All right. Well, very nicely done. A lot of information, a lot of accolades are coming in right now, Susie, for your very clear explanations. There's no other questions to wrap up. So with that, I thank you, Susie.
All right. Thanks, everyone.
Yeah. And hope to see you guys at a future webinar sometime.